Indian markets open mixed with Nifty trading around 26,100. Metals lead once again while IT stocks trade with cuts. Midcaps outperform.
CPPIB, US private equity firm, Stonepeak and Motion JV Co. make an open offer to acquire 26% stake at 194 rupees apiece. A move follows British Petroleum's decision to offload majority stake to Stonepeak. Stock gains of Castrol.
Reports suggest the electricity regulator CERC is deliberating lower transaction fee of 1.5 paisa per kilowatt hour versus the current 2 paisa fee. Shares of IEX trade lower in trade.
Big block deals in VIP industry see promoters complete the planned transfer of stake to a consortium led by multiple PE. Stock trades with cuts.
Coforge trades with cuts as sources tell CNBC-TV18 that the company is set to acquire digital engineering firm Encora for an enterprise value of $2 billion. A board meeting to mull a fundraise is also scheduled for today.
Hello, good morning. You've tuned into Chartbusters coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, good morning. While we saw a bit of a dull day coming in on 24th, today seems like, nothing exciting coming for the markets. 0.2% of decline, below 26,100 levels for the Nifty. So maybe everyone's gone on that holiday and we're not seeing much of a momentum today. But that's something we'll be keeping an eye out on.
Yes, maybe the markets are missing the boys on Chartbusters as well. But for today, as far as the markets are concerned, it's a mid-cap day so far. We are seeing that outperformance coming in 98 points higher on the mid-caps. But they also have come off sharply from the highs of the day. Small-cap index, that's the other big gainer, 0.3% higher there. We do have energy stocks which are doing well. Realty index also contributing a fair bit. Metal index, that continues to be an outperformer. So that is a sector to track as well. We do have losses coming in from financials, consumption and the pharma space. So these are some stocks which are on our radar and we'll keep tracking that for you. For now, let's welcome Saumil Mehta of Mirae Asset Sharekhan for a technical check on the markets. Saumil, good morning. Thank you so much for joining in. Usually the last week, of course, we see lower activity. The volumes are lower as well. What kind of levels should we watch out for in that case? Will it continue to be very range bound?
Good morning to everyone. It's been a little range bound. We've seen a little bit of correction in the last couple of days. However, the trend still remains positive in the short term, in the medium term, both. Nifty has taken support around the 40 hourly exponential moving average, which is very close to 26, 130, 100 levels. So I think from here, buy on decline should be the strategy and crucial support at 26,000. I don't see this 26,000 breaking on the downside. On the upside, the target would be around 26, 350, 340 levels, which is closer to previous swing high, the all-time highs as well. But above that, the most important part is that the medium-term outlook targets looks like 26, 700, 800 levels in the next probably a quarter. So buy on decline should be the strategy, and view is positive in the short term, medium term both.
Okay, our view is positive in the short and medium term. Saumil, good morning. Thank you so much as always for joining in. What are your top picks right now? What should one keep an eye out on?
In the short term, we've seen good traction in railway stocks. So Erida looks great to me. Erida has just broken out of a inverted head and shoulder pattern. Momentum indicators fresh by RSI is oversold and cutting upwards. A great setup. So stop loss would be 135 and the target would be 155. The second stock is Prestige. Prestige looks great to me, ending diagonal pattern. It has not broken upside yet, but I'm preempting that this pattern will break on the upside, taking support at 200 daily exponential moving average. Great setup. Short-term stop loss would be 1595 and the target would be 1730.
Okay, all right, Saumil, thank you so much for joining in. The realty space is doing well and Prestige Estates is one of the bigger names which are doing well in trade. With that, we'll do one thing. We'll slip into a break. When we come back, we'll talk about a lot of stock-specific action that's happening in the broader markets and in the Nifty as well. Stay tuned for that.
Welcome back to Chartbusters on CNBC TV18. Let's just look at the railway stocks as of now. They are all buzzing in trade. Last few trading sessions we have seen them run up. Today also they're managing to hold on to good gains. IRCTC, Ircon, Railtail, Titagar, Jupiter Wagons, all of these buzzing in trade. And this is coming after train fares have been hiked from December 26th. That's today. And this has come in as a notification there are new ticket prices. So we'll watch out for all these railway stocks. But let's put the spotlight on Coforge as well. Now, sources tell CNBC TV18 that Coforge is in advanced talks to acquire stake in Encora. Rachna is joining in with us now to give us more details on this one. Good morning, Rachna.
Good morning. Sources tell us that Coforge is in advanced talks to acquire a stake in Encora in a transaction that's pegged at up to $2 billion. Now, the deal would mark a potential exit for private equity major Advent International, which currently holds a majority stake in Encora. To put this in context, Advent entered Encora in 2021, acquiring the company from Warburg Pincus at a valuation of about $1.5 billion. Warburg had backed Encora during its earlier phase of expansion, helping build scale in offshore delivery and deepen its US enterprise client base before selling out to Advent, and now as the company has transitioned into a more mature digital engineering platform. Encora operates squarely in the digital engineering and product development space. Its core strengths lie in cloud-native application development, data engineering platform, and platform modernization and enterprise software services, with a strong concentration of clients in North America. Over the last few years, under Advent's ownership, Encora expanded both organically and through acquisitions, positioning itself as a high-growth engineering-led alternative to traditional IT outsourcing firms. For Coforge, this would be a transformational transaction. The company has historically been a mid-sized IT services player, as we know it, with strength in BFSI and travel tech, but limited exposure to deep product engineering. Encora would significantly shift that mix. As of March 2025, Coforge reported a net cash flow of around 474 crore rupees and cash and reserves of roughly about 600 crore rupees. Now, that balance sheet does provide flexibility, but not enough to fund a $2 billion deal, or a deal that could go up to $2 billion outright. Now, as a result, Coforge's board is expected to consider a fundraise, potentially combining debt and equity to support this acquisition. Back to you.
All right, Rachna, thank you so much for joining us with all those details. The stock, though, has come off from the highs at the day's low as we speak, so we'll watch out for any updates on this one. But this is the update as far as Coforge is concerned. But that's not it. We have a lot of stocks which are on our radar today. Castrol is one of them. We spoke about that big deal of British Petroleum selling 65% stake in the global Castrol company to Stonepeak at an enterprise value of $10 billion. The indication was there would be an open offer for the Indian listed company, that's Castrol India, and now that has come by. The open offer comes from Motion JV Co, Stonepeak and CPP Investment Board. They will buy 26% stake in Castrol India. The price is 194 rupees a share. If we compare it with Wednesday's closing price, it's around 2.5% premium, and that's exactly the price that it's trading at as well. And in terms of the shares, it will be 25.71 crore shares. Why is it important from a perspective of the shareholders? Because now institutional holders, where FIIs are 10.3%, we have Government of Singapore which holds 1.3%, DIIs have 14.95% stake, and LIC has 10% stake out of that. So it will be very important to understand how this open offer goes through, which will happen only after the global transaction is completed. The other important point to note is that Stonepeak has so far delisted all the acquisitions that this particular company has made. It was Air Transport Services in 2025, in 2024 it was Acumen, and in 2022 it was TK LNG Partners. Just to give you a perspective on the transaction, British Petroleum will be selling 65% stake to Stonepeak, and that is not it. After a lock-in of 2 years, they have an option to sell the remaining 35% stake as well. Everything according to the minority, basically the significant proportion of Castrol's JV in the minority will be related to what is happening with Castrol India Limited. So it will be very important to track any updates from here on. Kotak has an ad rating with a fair value of 210 rupees on the share. They expect the stock to be range-bound till the time open offer is completed. It will, of course, trigger only when the global transaction is completed, right? But they do not expect any impact on operational performance because, of course, the transaction is between the promoter entities, so nothing happens to the financials as well. Remember, BP has been holding stake in Castrol since 2000, and in last 10-20 years as well, we've seen the stock go up by 7.4 times, but their revenue and PAT CAGR has been in single digits, so that has been a worry. But dividend payout has been quite strong, ranging between 66% to as high as 139%. For Stonepeak, it is an alternative investment firm with the $80 billion in terms of AUM and largely investments in energy firms, renewable energy, clean energy. Some names will come up for you on the screen, a lot of them in Europe as well. So we'll watch out for more updates on this one. But for now, two important things: what happens with the open offer, and second, whether Castrol will be delisted, because that's what Stonepeak has done so far.
Absolutely. We'll surely keep out on the triggers that you mentioned going forward as well. But let's talk about IEX. That's another stock that's in focus today. It's under pressure as reports suggest that CERC is mulling lower transaction fees. Vivek is now here to tell us more details on this one. Vivek, over to you.
Well, that's right. So, the regulatory overhang as far as IEX refuses to die down, number one is the impending imposition of market coupling. But other than that, ET has raised fresh concerns. ET says that CERC is evaluating a revision in transaction fees charged by power exchanges in India. They have said that CERC is considering a lower uniform fee of 1.5 paise per kilowatt hour per side, which is both buying as well as selling side for most trading segments. Currently, remember, exchanges levy 2 paise per kilowatt hour on each side. So total transaction charges could drop by as high as 25% in case CERC takes these recommendations into account and goes ahead and implements them. For longer duration contracts, the cut could be even steeper. ET reports that fees could be reduced to as low as 1.25 paise per kilowatt hour, and this will mainly be in the term ahead market. We've reached out to IEX, no comment so far, but an important development to track nevertheless, given the fact that this could have a material impact as far as top line is concerned.
Okay, all right. Thank you so much, Vivek, for joining us with all those details. Quickly, let's take a look at SRF as well, because there's an anti-dumping duty which has been levied on R134A, which is a refrigerant which SRF produces. This is on all the imports from China, because China has been dumping this at lower prices, which was not good for the domestic industry. Now, remember, only SRF is impacted because it's the sole producer of R134A in the country. They have a capacity of 20,000 metric tons per annum, and any sort of change in the realizations, the domestic realizations, if it's $1 per kg, it would impact their EBITDA by 2% for FY27. So not such a big impact, because that realization differential has been coming down. So not such a big impact on SRF, but yes, 2% EBITDA positive by FY27, considering that prices remain at current levels. So we'll watch out for that stock as well.
Okay, thanks so much for that, Sonal. But on that note, we're actually going to slip into a very short break. After the break, we'll get you more updates, more stock-specific action. So stay tuned in.
Welcome back. You're still tuned into Chartbusters. Zepto is set to pre-file its DRHP today under the confidential route. Rachna tells us more on this and what she's picking up. Rachna?
Well, after a delay of nearly a year, Zepto is now set to confidentially file its draft IPO papers. Today, that's on December 26. Now, this is according to people familiar with the matter. The company is targeting a public listing in the July-September quarter of 2026 and plans to raise around 11,000 crore rupees. That's about $1.3 billion. Now, this is through a mix of fresh equity and an offer for sale. But the timing is significant, both for Zepto and for India's fast-maturing quick commerce sector. Let's start with the numbers. Zepto's revenue growth has been sharp. FY25 revenue more than doubled to 11,000 crore from about 4,500 crore rupees in FY24. Losses also widened alongside expansion. Net losses rose to 3,367 crore in FY25 from 1,249 crore rupees a year earlier. Now, the company was last valued at about $7 billion in a private round in October 2025. So, public listing would place Zepto alongside rivals such as Blinkit and Swiggy at a time when investors are far more focused on profitability and execution than growth alone. Ahead of the IPO, key strategic shift has been the effort to Indianize the cap table. In January 2025, Zepto completed a reverse flip, moving its domicile from Singapore back to India, which is pretty standard. But it has worked towards raising domestic ownership largely through secondary share sales. Motilal Oswal's founders bought shares worth roughly $50 million. But that may not have been enough because Zepto continued to attract global capital, including a $450 million round led by US-based pension fund CalPERS in October 2025. Zepto's Zepto's origins trace back to Y Combinator when the accelerator invested in 2021. That, and with later investors, the company scaled rapidly and became India's first unicorn of 2023, ending a prolonged funding slowdown, if you remember. But scale also brought scrutiny. In late 2025, the Central Consumer Protection Authority fined Zepto for using dark patterns such as drip pricing and basket sneaking. Earlier in 2025, a Maharashtra FDA inspection led to a temporary suspension of a warehouse in Mumbai's Dharavi, but that was an isolated case. As per reports, the company also laid off over 500 employees last year as a part of cost control measures. Despite this, user momentum remains strong. According to data from CLSA, Zepto added 1.2 million weekly active users in the week of December 15, the highest among quick commerce players. That said, Blinkit continues to lead on downloads. How public market investors weigh growth, losses, governance, and competition will ultimately determine how this IPO plays out.
Okay, Rachna, thank you so much for that. Zepto surely will be on the radar going forward as well. But let's talk about tariffs, and the uncertainty over trade deals ensured that volatility was the only constant in global trade in 2025. And for India and Indian businesses, a source of significant heartburn. Abhimanyu Sharma is reporting to us that while the government fought to keep trade on even keel and find new markets, a cheaper rupee has been one of the only comforts for exporters. And 2026 is likely to see much of the same unless the government effects a breakthrough. Let's go across and listen in.
2025 started with the prospect of India striking lucrative trade deals with many nations across the world, including the United States. The ongoing Russia-Ukraine war, the Israel-Gaza conflict, sanctions on Russia, along with geopolitical tensions in the Red Sea, pushed up freight costs for exporters. Despite uncertainties, India's total merchandise and services exports in FY25 hit an all-time high of $825.25 billion, a growth of 6.05% year-on-year from FY24's levels. But US President Donald Trump threw a spanner in the works, imposing tariffs on imports based on product and country of origin. In the second week of April, he announced global tariffs with a baseline of 10% across all imports and reciprocal tariffs on some countries, including a 26% tariff on India.
We get along with India very well, but India has, you have to understand, for many years, it was a one-sided relationship. India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world. You know, everything they made, they'd send it in, pour it into our country, and therefore it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And
a breather came soon after. Reciprocal tariffs were paused for a period of 90 days, even as talks for a bilateral trade agreement continued. Indian negotiators met with their American counterparts numerous times, even in person, and talk of a trade deal remained a low but steady hum. Then came the big jolt. On the 27th of August, President Trump blamed India for funding the Russian war on Ukraine by continuing to buy Russian oil. He hiked tariffs on India to 50%. India pushed back.
Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on.
As India and the US continued to engage with each other in a bid to arrive at a mutually agreeable and beneficial trade deal, India managed to conclude negotiations on some significant bilateral free trade agreements. It signed an FTA with the UK in July, though that is yet to come into effect. The government has also facilitated the opening up of a few new markets for Indian exporters, including Switzerland, Norway, Iceland and Liechtenstein, as the FTA with the European Free Trade Association came into effect in October, and the European Union approved imports from 102 fisheries establishments. In December, India and Oman completed negotiations for a comprehensive economic partnership agreement, under which Oman will provide India duty-free access to 98.08% of its tariff lines. This covers 99.38% of what India exports to Oman. More recently, India concluded negotiations for an FTA with New Zealand. While these came later, Indian exports still stood on firm, albeit fragile ground. In the first half of the FY26, India's exports rose 5.86%, led by a 9.34% rise in services exports and a 2.90% rise in merchandise exports. This was driven by electronic goods, engineering goods, drugs and pharmaceuticals, marine products, and rice, with Spain, Hong Kong, China, and the UAE proving to be strong markets. Though India's exports to the US also rose 13% year-on-year in the first half of the financial year, this included a lot of front-loading of exports as traders tried to beat the window before higher tariffs kicked in. But the brunt of higher US tariffs is being felt, especially in the export of labor-intensive areas like textiles and leather, which have a high dependence on the American market. And while talks continue, there is no definitive headway yet.
I have said many times that all agreements, all discussions have many diverse, many different angles, many dots have to be connected, and we never negotiate deals with deadlines.
To mitigate the hit from US tariff disruptions, the government also looked for other supportive measures. The Export Credit Guarantee Corporation upgraded the country ratings of 24 nations in September, reducing insurance costs and overexposure to markets affected by tariffs, protectionist policies, or restrictive market access. The fall in the rupee's value against the dollar also gave exporters some cushion, as did a mammoth GST rate rationalization exercise that gave producers more traction in the domestic market. The recently announced export promotion mission, which aims to provide exporters with financial incentives in their quest for newer markets, is also designed to help.
भारत के किसान, भारत के मछुआरे, भारत के पशुपालक, उनसे जुड़ी किसी भी अहितकारी नीति के आगे मोदी दीवार बन के खड़ा है.
As 2026 dawns, talks for a trade deal with the US are still underway. Buzz of it being imminent crops up periodically, but as people say, nothing's certain till the dotted line is signed.
Right now, we are engaged with not only negotiating a bilateral trade agreement, which definitely with a country like United States will take a lot of time, because trade agreements are very wide-ranging agreements these days with a lot of issues, not only market access issues, which are negotiated under the umbrella. But at the same time, we are also engaged in a protracted negotiations on a framework trade deal, which will try to address the reciprocal tariff challenge that the Indian exporters today face. So these are two separate parallel negotiations going on.
India is also engaged in negotiations with the 27-member European Union, the Russia-led Eurasian Economic Union, the 5-member Brazil-led Mercosur bloc, Chile, Peru, and Maldives. Terms of reference have also been finalized for trade deals with Israel, Qatar, and the 6-member Gulf Cooperation Council. In addition, an FTA review is underway with the ASEAN bloc, and expanded FTAs are being considered with Australia and the UAE. None of these may materialize overnight. But as each of these fructify over the next 12 months, Indian exporters can expect some relief. The biggest relief, however, will come only when India and the US are able to agree on terms that both leaders find palatable. In New Delhi, this is Abhimanyu Sharma for CNBC-TV18.